Hello, and thank you for clicking on my video. Today we're going to be doing some technical analysis for the SPY, Qs, Apple, Tesla, Nvidia, maybe a couple others. What I overall wanted to start this video off was with the big picture, okay? So I have a monthly up in front of me here, and you can see since 2009, what have we done, okay? We've gone way up, and what has held us up every single time is the 50, okay? We have the 50 touched here, we have the 50 touched here, we have the 50 touched like spot onto it here, and then we get 2020 where we start to crash to lower levels and we see the Fed jump in and start pumping money into the market, and that's what held us above the 50 this time. So what has happened in recent history is we actually did get in this correction a touch of that 50 and we've held above it. So we overall, what we need to decide as my drawings start to pop back up is this our high? Is this our all-time high and we are going to see a crash from these levels, or are we going to see one more push to higher levels to give us some kind of divergence and not confirming this as a lower high and giving us that crash? And I know everyone's been screaming crash for the past, like, what, 2 years or something like that. And I've done it on my channel. I've said crash, but the crash that I'm actually looking for and that I think will play out over the next year or two is we are going to see this trend line right here touch somewhere around that 330 price, okay? Or we could see in a very dramatic crash, we could see a sell-off all the way down to 156.80. Those are the levels that I am paying attention to, and that's the crash, the actual crash that I'm going to be paying attention to and what I think actually could happen over the next year or two. I'm going to talk about this channel, but real quick, notice I have another date marked, which is Thursday, October 12th. The last time that I had a date marked on this channel was right here. That was Wednesday, September 20th. And what did we get that date? We got the Fed rate decision. And this is the date that I told you weeks in advance I felt was going to be the date that actually tears the market down to lower levels. And now, because of that government shutdown not happening, maybe right here we're going to start to see that bounce. I just want to tell you how important this channel is, okay? This channel has held us up for the past year, almost to the date. Literally, we're like 2 weeks away from being in this channel for a year, okay? So we wanted to notice here, this channel does like to have pullbacks of about 8 to 9%. Right here, you had a pullback about 8 to 9%. Right here, you had a pullback of about 8 to 9%. And right now, we're in a pullback of about 8.1%. Okay, so the bullish case for this is that around that October 12th, we actually get good news from that and we see an extension, and this is just a flag to push us up into the upper side of that channel, possibly giving us that divergence on the monthly that I was going to suggest. And then the bearish case for this is I do believe we will get some kind of pop up into October 12th that then gives us a piece of data that crashes us to the downside. And now we're going to tell you what that data is. October 12th, the core inflation rate month over month, the core inflation rate, the CPI comes out on the 12th. Okay, so the CPI, if this is able to come in hotter than expected, people will see that as very, very bad news, and then we could see that crash to the downside. But if this actually comes in lower, this could extend us to the upside. So it is going to be a very, very important date to mark on your calendars. Now, you guys got a thumbs up if you were subscribed last week, because this head and shoulders on the hourly actually did start to form, and we called that happening a couple days in advance, so good job. But we did hold up at our last little trend line of support here, so we could see this in the bullish case extend higher, and possibly that news on the 12th comes out. And it is actually good news for the market, and therefore we can make a new high that then gives us that divergence I was talking about on the monthly. The bearish case here is I believe this news will be pretty good for the market. I believe that the government shutdown not happening causes us to think, okay, now we're not going to be downgraded by Moody's, so we could see an extension up into this gap fill. We'll have to see what happens around that gap fill. And we could see an extension all the way up into this trend between our most recent highs before we see this break. And when this does break, you can see there's not much holding us up. So you are going to beeline towards that 200. And I have 321.29 marked just because there's a little bit more volume in that area. Okay, so there's not a lot that's going to hold us up, but right around that 321.29, we have some stuff, some buyers that could step in and hold up the market one more time. So overall for this week, bullish case, we could see this head and shoulders start to play out. Okay, this head and shoulders starts to play out. We could see that measured move actually start to happen. We could see a full touch of the top here in our trend line, I guess, between the previous two highs, which likes to happen a lot. And then that would actually coincide. Let's say this move starts to go like this, maybe we pull back a little bit here and then we pop up. guess what? Thursday, October 12th, right when that CPI data comes out, we could be touching the top here. And if we start to see weakness, we could start to tear to the downside. The bullish side to this is that actually comes out. We're not in any kind of weakness on the smaller time frames or even, 1 or 2 hour time frames. And we see this break and get that extension to the upside. The bearish case, if we do get to the top of here, is we start to see this break down and then we cut below this low. That will immediately direct us towards our 200 or that price point of 321. Let's just look at all scenarios here. If this starts to break down, what you mainly want to happen, say early on in the week, if you're looking for this to tear down a little bit lower, you could see the hourly on the MACD start to roll over. Okay, if this MACD does not reject the confirmation by turning to the upside and actually confirms to the downside, most likely you could see some kind of touch of the bottom of our trend here, and then maybe we get like just a deeper right shoulder. Or we could see this start to break. And overall on the bearish side, you just want to be paying attention to when this low right here, when that breaks. Okay, when that low breaks, we are going to be somewhat in a free, there's just not a lot to hold us up. One of the things that could lead the market higher is Apple. So we're going to discuss that real quick today. Okay, now the main thing with Apple that we've been talking about for quite some time was we were stuck in this range. We broke out of it, and now we need to close on the daily outside of our purple zone of support to break us down to that 200. And as you can see, we're struggling to do that. I said this on Friday. We are struggling to do that. And that just tells you that we have, another case to extend to the upside. Overall, I'm just paying attention to this little trend here. And if we're able to get out of the upside of this purple zone here. So if we are able to do something to get us out of here, I don't know how exactly it would play out. Maybe we get a big reaction, we dip down back into this, and then we can extend to the top of that previous range. Overall, this week can be bullish, and I think the Magnificent Seven will hold the market up. So there is a chance that Apple goes all the way up into this gap fill and even gets into its resistance zone previously marked by this other gap fill and gap resistance by October 12th. The bearish case is still pretty similar to what we've been discussing. If this purple zone does break out and we get that daily close, we'd be looking around that 200-day moving average, which we can pull up for you real quick. It sits right around, I have 165.79 marked. It's kind of just a little level that I like to pay attention to that I've marked out for myself. But if we do see this break out, we would be looking for that actual test of the 200 in the bear case. Now, another thumbs up on Friday I gave to you guys was Tesla. We actually stated the day before this happened that this looked like it was starting to pile up, give us some kind of flag on shorter time frames, and maybe this is our left shoulder head, and this is just a small right shoulder to project us to the upside. That actually played out, so good job. And then now we're getting that retest, and we need to see more strength from this area to go fill this gap around 263. As far as how high this can go on the bull side, if we are looking bullish this week, is we just want to zoom out. This blue bar up here that kind of meets up with this white line, that's just our triangle that we discussed last week on the daily. That goes pretty far back. It literally goes all the way back to its previous highs. So what we could see happen from here is a full extension up into this area. I'm expecting it's not going to be a straight line, right? I'm expecting it to kind of be like this or something, but I'm overall just paying attention to what the price looks like around that October 12th, and then look at that reading. If we get a high reading on the inflation report, then we are going to see more dramatic selling to the downside. If we get a low reading, we could actually break out of this triangle and start to head to higher levels on Tesla. The bear case right now is kind of similar to other stuff we've talked about. You want that MACD to start to curl over, and then we maybe go touch the bottom of that triangle that we talked about on the daily about a week ago that goes pretty far back. Okay, so you want this to start to curl over, break this low, and then maybe around this area we can start to find some buyers. Okay, Amazon, and then we're going to get into Nvidia. Okay, so Amazon here, we actually notice we have a left shoulder, we have a possible head, and then I'm looking for this to start to pop up into this area to give us a pullback, to give us that right shoulder right in here. That's just because the formation of it would look very nice for a trader. It doesn't have to play out that way. We could see it start to extend to higher levels since we did just break out of our little really thin wedge here. And when it gets really, really tight, we do like an explosive move, but we could see Amazon extend as high as, I would say, this 135 gap fill, 135.35, and then we could also see a full retest of the wedge that we broke out of. Okay, so we broke out of a wedge for all this to happen, and we could see this start to extend to higher levels all the way up into a full retest, somewhere around that 140, 138, right in between there. The bearish case, you just want that MACD on the hourly to roll over to the downside, and then we can start to head directly towards that 200-day moving average, or possibly this little trend line down in here right around that 112, 110 area. Overall, I think it's going to be good for the market that the government did not shut down, because if the government did shut down, then Moody's would maybe downgrade us on our credit rating. So if you can see on the daily here, it's a little easier to see if we are able to extend to higher levels all the way up into here. Maybe we even go past it, but overall I'm looking for that retest before the 12th, and I really want to be paying attention to what exactly comes out on the 12th and what the charts look like the day before the 12th. And Nvidia, I'm sure you guys love when I talk about Nvidia, right? So here you go, left shoulder, head, right shoulder. It's what we've been talking about. I even marked this 470.61 because that's where I think we could go. It doesn't mean that we can't get bullish, okay? Because we are dinking off that, 50 on the monthly on the SPY and stuff like that. So if this MACD does curl over and we start to see some big strength, some good volume, no weakness in the 1 hour, 2 hour time frames, we could see in the bullish case this extend up and to give us one more touch of these two recent highs trend line here. Okay, so that's kind of what I'm expecting on the bull side. The bear case, I overall believe we're going to see strength this week, and we're going to see that gap fill, and then we want to be seeing what happens from there. If that comes out as bad news, that could tear us to the downside for the bears, and then maybe we get a little bounce, and then we break this level right in here. That level is going to be very important. It's the neckline of our head and shoulders. We can measure this out. Maybe I'll do that tomorrow's video if you guys want to subscribe. That way we can get some full measured moves for you guys as we see what happens on Monday. One thing that's given mixed signals is the VIX, and we told you guys it's pretty simple. When we close above the 50, we do see dramatic selling, and that's exactly what happened the next day. So hopefully you guys did catch that info. And then the next step is we want to close above the 200. The thing that could lead us to a bounce right now is we closed above the 200. We need to get above 20. We're outside of our Bollinger Bands if I pull those up. And we actually did see that pull off, and we're getting that retest that I was talking about. So now we need to see, is this retest going to get us back above the 200 with a closing bar? Or are we going to see this start to drop off and fill this gap, maybe even come down into these types of levels? It's just something we need to pay attention to. We need to pay attention to if the VIX is above the 200 or if it's below it over the next few days. Something we definitely need to happen in order for us to get a bounce is we need this 10-year yield to start to drop off. And you're seeing we actually did get a topping bar here, and then we came down all the way, and we're finding support at that 9-day moving average. We need this to start to come down and possibly get a retest of the previous high that we broke out of, or even come down to the bottom of its channel to see that big bounce come in. It's definitely possible at this point. If you go look at TLT, which we're going to do next, it really looks like that's possible. But all you need to know is the longer we sit up in this unknown, the more pain there's going to be. So you want that to start to drop off. You don't want this starting to head to higher levels. We're going to see everything head towards their 200-day moving averages if this starts to extend higher. TLT was pretty cool because it actually did hit my price of 88.14. We'll talk about that in a sec. But mainly what I did on Wednesday, or I think it was Wednesday or Thursday morning, I put this in just because I was just like, okay, these two lows here, you could see that support right along here. That would bring me past my little price target, and then we can see what happens from there. And you notice right when we touch the bottom of that, we start to see some buyers step in. Okay, so the buyers have stepped in. The repricing, considering the yields are so high, we needed this to come to lower levels so that we could reprice these bonds. That's what happened, and then we bought back up. Sorry for hitting that. Then the cool part about Friday was we actually came down and actually touched directly on my price target of 88.14. And then we saw a little bit of strength. And as you can see, we're fading here. So if we go into the shorter time frame, say the hourly, we do look like we might want to curl over one more time. But maybe, just maybe, because we're getting that rejection of the cross on the MACD here, maybe we're able to extend to higher levels. It's hard to say where this thing could stop. There's a bunch of gaps that could act as resistance above it. So I won't really speculate on that. I just overall think if we're able to get that pullback to the previous high on the 10-year yield, we could see TLT go all the way up to 93, 23-ish before we see any more downside. The bearish case for TLT, if this starts to roll over, we could just see another touchdown here that sets us up a nice little divergence between these lows, and then we could see that start to bounce from those levels. Oh God, I forgot I had headphones on. The overall takeaway from this video is that if we look at the monthly overall, we can say we are in an overall pullback. Okay, we're pulling back to that 50, and maybe that's enough to get us up into a new all-time high with the SPY. But what I'm looking for is, I believe there will be a crash in the next year or 2 years, whether that is we go make a new high and give us some kind of monthly divergence, or this wants to be our lower high right now, and we see that start to tear to the downside with a hot CPI reading this October. We'll have to pay attention, but overall, I wish you guys the best of luck trading this week, okay? It's going to be another fun one. Tune in for my videos. Thank you, as always, for liking and subscribing. Peace.